Hey guys, Pav here, lead market analyst here at Swyftx. And today we're going to dive into what's making news in the markets. What should we be looking at? Because we have seen a bit of a sell-off that's just continued for the month of November. Now, October, we spoke about at length in previous editions on how, from a seasonal perspective, we have seen nothing but green months in prior years. Now we've seen that trend break. This is the first October in the last 7 years where we've actually seen a decline in Bitcoin's performance. And obviously, that may stir some concerns for a lot of people, particularly around the whole narrative, will Q4 be green? Because that's the other element that a lot of people are speculating that Q4 in a post-halving year, which is the year that we're in right now, has historically been quite a good one for the crypto markets. Is that potentially gone to the wayside as well? And a lot of this has come for a bunch of reasons, which we're going to dig into today. But firstly, just to point out one of the key issues that we have seen play out throughout the back end of the year has been the US government shutdown. Now, that has come to an end now, officially as of yesterday, but we're still waiting for the market to decide what sort of impact this will have at the end of the day. Because so far, what we have seen is, again, we have just seen assets continue to sell off in the last 24 hours, even in the advent of this news coming in. Now, a lot of you may be wondering, okay, the US government shut down. Why is that such a big deal? There's a number of reasons. From a industry perspective, we haven't seen any further bill progression or legislation progression in the US. There is currently something on the docket regarding market structure. So we're talking about what is the regulation going to look like for exchanges, how are users going to be protected, that sort of thing. Big issue, especially after the whole FTX drama of 2022. And also the second thing that we've seen with the government shutdown is the lack of government data coming to the table. Government data around inflation, growth, those sort of things. It's what the market uses to adjust its footing and whether to decide to go risk on or risk off, particularly as interest rates have continued to be a very key theme for this year. Now, you may be wondering, okay, I'm aware that interest rates do affect the markets. What particular impact does it have on something like Bitcoin? This is a chart that basically goes to describe that. Now, it does look a little bit busy, but what we have here are two major metrics. We have Bitcoin in the orange, and in the black line, it's basically a measurement of what is the overnight lending interest rate that big institutions like banks are paying in overnight lending markets. Now, this is a very normal operation for some of the larger banks that are out there. They're not really subscribed to the official interest rate or the effective funding rate, as they like to call it, that you see headlined. So it is essentially something that can move as the supply and demand for money moves, right? And also the market's expectations for interest rates as they tend to shift and ebb and flow as well. So the key takeaway here is, as you can see here with the horizontal dashed lines, they're the lines in the sand of this particular market pricing in a certain amount of cuts in the next 90 days. And what we can see is every time the market has moved towards greater rate cut expectations, which is when the chart moves down, we have seen Bitcoin's price start to rally higher as well. And the inverse of that is true as well. We have seen this particular metric shoot up to the upside. What our key takeaway there is that the market is expecting less interest rate cuts. Often, well, we have seen the market take a bit of a downside turn as well. So what's key to call out here is where this particular metric currently reads, sitting at levels that we haven't seen really since about June this year. So again, the market's having not done too much in recent times. It's almost like we have seen the market's expectations of interest rates completely reset back to what they were towards the middle of this year. And this is where it all ties together. Is really important. We have got another Fed meeting coming in on the 10th of December, just a little under a month away. We're now going to see government data start to flow through. We're going to see the market start to reprice and reevaluate its attitudes towards rate cuts. Maybe they do come, maybe they don't come. But what we're seeing right now is a market moving towards expectations that there's no rate cuts in the next 3 months. So again, this is something I'm watching quite closely, as I think if we do start to see this particular metric tick down, and maybe we see things like inflation cool, we start to see maybe job stress come through in the market. So we're looking at job opening data, unemployment rates, that sort of thing. They're the key concerns and constraints that may push the hand of the Fed to start to ease monetary conditions, as opposed to this whole idea that we may not see rate cuts from where we're standing today. So that's all there is today. We'll be back again to update everyone on how this is all progressing. But right now, it's definitely feels like a wait and see moment on how the market's going to respond. Thanks very much.